Howdy, Jacob here. Today we're looking at Envestnet in the software industry, 3.5 billion market cap, 4.2 billion enterprise value. They provide wealth management software and services globally. They operate through two segments, their wealth solutions and their data and analytics. Founded in 1999. Growth is very impressive. However, the revenue growth has slowed very heavily the last 2 years. From 2014 to 2021, their lowest revenue growth year over year was 10.8%. And the last 2 years have been 4.5% and 0.5%. Operating margin has gone down from 6% to negative. Gross margin gone down as well. Not a lot of positive signs coming out here. Return on invested capital, again, negative due to that net operating figure being negative. Income statement shows that majority of their cost is going to be cost of goods sold. Solid increases in sales, general and admin, but not as much, or pretty much in line with revenue. So that's not the big concern here. Balance sheet shows a little bit of debt, 91 million cash on hand, no short-term debt, 877 million long-term debt. 800 million long-term debt in relation to free cash flow is going to be over 4 years. So even if the most recent year at 200, you're looking at 4 times that. So there is a bit of net debt here. Optimally, nothing. If you want to invest with fantastic opportunities, then obviously I think anywhere from 1 to 3 years is fine. But 4 years is a little bit high. I'm not going to be allocating that much capital to debt reduction, though. I'm going to keep it how they've done in the past. Quite a bit of net acquisitions, and then some reinvestment, some share repurchases. But solid production of free cash flow with very little capital expenditures. So let's get to assumptions here. On the revenue growth side, it's dampened recently. I think they can get back to 5% pretty easily. I'm just going to go market average here for P, price to free cash flow. Their free cash flow margins are much better than their earnings. So I'm going to assume that their net income gets closer to that free cash flow margin. 1% of shares for them is about 35 million. And I'm going to say that they actually issue 1%, saying that they buy back maybe 30 to 40 million of shares. And it's still going to be issuance because I'm assuming 100% of the stock-based options get shares issued. And in doing so, we're seeing a 76% fall before you get the return we're looking for here. So could be a good company. For me right now, I'm hesitant by the most recent 2 years. So maybe I'm being conservative with the 5%. But given what I'm seeing, I think this is reasonable conservatism, not over conservatism. And it's not obviously cheap for me to do more research. So I will be waiting until it gets to a more attractive price. Hope you enjoy the video. Have a great rest of your day.